in Euro USD, so in Euro USD, you can see that. So we are expecting market to come out, at least to come to this upside. And sorry, on USD JPY, sorry. This is not Euro USD. So you can see we are expecting market to come here or come and use this level as a liquidity. So let's go to our 1H time frame. If 1H is not clear, you can go to 2H. If it's not clear, you can go to 4H. You just have to be in that same direction. So what is our 1H doing? You can see that even our 1H, if you look at it, you can see that this is the obvious maybe change of character in our 1H. All these are liquidity. Now, let's mark the structure. So let's say these are 1H break of structure or change of character. This level will serve as our 1H inducement. I think I see some small movement inside here. And if this candle is too much for you, you can drop it to 4 hours so that the candle will be smaller and, you know. So, and after that, we can look for POIs. I think this is a valid POI, but this one has failed. Remember what I said. When this POI fails, it's likely the market is coming to this extreme. You can see, these are our extreme POI. But how market will get there might not be your business. So look at what I said here. You can see when this one fails, like this, market creates small pullback and did what? And this one pushes back. The market mitigates something here, and you see it started dropping. So, and the same thing happens, the same process. You can see after market drop, market had to protect this high, and market swept it. You can see we have a sweep of this high because it's now turned to sell structure, internal sell structure now. All these are liquidity. This one are liquidity. This liquidity. Just because market sweep this high. And immediately sweep all this high, you can see how it dropped. All this drama is just for market to come here. So if you that's why I said you don't need to involve in the drama, just position in two places. If you say okay, you want to okay, now that you know market is coming here, you want to set towards this level, you're likely to have some to make some good trade. But what about if the noise is kind of too much and liquidity and volatility is much and market just they do its thing just to come here? Now look at it. Let's say I understand that this is decisional POI. I posted here, I position here. I knew this is going to be a very low probability trade because there are a lot of liquidity below. But because I'm following the plan, I just decided to do whatever my plan says and I position here. Or probably maybe you put your stop loss here and you're targeting here. Let's say 1 to 3 or 1 to 4, or you target here. You can see that even currently now, market has already given you the money that you've lost here. And you can see your trap just catch. You see immediately market got to this level, market push up. Do you get the concept? So now this is supposed to be the active trade. Me, I actually position for this, but I use 4 hours time frame, but market refused to take me in. I position for it. Market refused to take me in. I think if I can show you, you can see, I think somewhere here. You see, this is where I'm expecting this market to come back because I missed this 4 hours order block. This is the 4 hours order block. I missed it. This is supposed to be my entry like this, using 4 hours time frame. Then maybe by now I will have had almost my one. I will have hit TP self because my 1 to 3 is okay for me. Sure, you understand. So immediately I saw it, I knew I missed this top. And now okay, let's see, maybe market will just use this level as a liquidity and come down. Then before you continue. Sure, you understand. So that's why I position here. And by that time you can see that I still keep my stop loss here, but my risk to reward has reduced. So I just say okay, maybe 1 to 2 or 1 to 5, 1 to 2.5, I'm okay. As long as it's a valid setup. Sure, you understand. So that's how I position for it, and you can see it's still the same thing. So assuming that I didn't miss this setup now, I would have been in profit. Maybe by now, using this 4 hours time frame, I would be in about 1 to 2. Then maybe I would have been targeting 1 to 3. So maybe this trade, maybe by Monday, I will hit TP or whichever way. And if it comes down, then it's fine. And come and use this liquidity as a liquidity. So the process continues. Do you get it? Yeah. I've passed through the level of moving stop loss. Once I place my trade, whatever things that want to happen can happen. Once I place the trade and I don't move stop loss. If you're moving stop loss, it means that You had a plan that you are risking 1%, and because you feel the market is coming to your SL and you panic, and what do? You increase. Moving stop loss means you increase your risk. So you end up losing 2% or 3% because you are moving your stop loss instead of just losing 1%. And remember, all the losses have been okay to the break even. Yes, that's trade management. Yes, I can do that. But I do it based on, let's say I'm targeting here now, and my TP is here. A market has already given me 1 to almost 1 to 2.5 like this. I've seen 1 to 2.5. I can say, okay, this is a good trade, but it's already a good trade. I don't need this trade to end up being a losing trade for me anymore. So instead of me losing this all this money and still being negative, I would rather protect my capital because market have moved almost to my TP. When it's like you want to make 1,000, you are risking $1,000 to make $3,000, and market has given you $2,800. Fine, you don't want to close that trade because you want market to do its things. You want to follow your plan, but you have the obligation to protect your account. This money you're supposed to have, because it's based on your plan, it remains few to get to your TP. But since the market has presented you that amount of opportunity, that opportunity must not turn to disadvantage for you again. So you have to protect your capital. Capital protection is also very important. So that's why I said it's trade management. But if I'm here, let's say market is here, I don't move to break even here. I can't, because I need to give the market room to breathe. What about if the market come back here and now start going up to my TP? So for the consistent sake, it's only when market has given me above 2.5, that's when I break even. And if I'm confident, because I'm trading from extreme, I will leave it. I will just leave it because I'm confident. Sure, you understand? And it's still in my trading plan that I can leave it. But if I'm trading from decisional and markets give me 1 to 2, for decisional rules, 1 to 2 is where I break even because I know that that decisional is low probability. So, and I understand that if this now fail, I have the opportunity to buy from here. And this is high probability. So instead of me losing 1% or so percentage here, I can break even here and now make money here. Do you get? So it's all about trade management. So you see how USD JPY turn out. So this is your value setup like this, then push. So if the market push up, fine. Market can easily push up and come and do whatever. These are all liquidity. This stop loss here, everybody that stop loss here, that sell this market down. So these are all liquidity. So market can systematically continue doing its thing. All these things doesn't concern you. But in fact, market can do this. All this doesn't concern you. What concerns you is your POI entry and your extreme MP, your decisional POI entry and your entry extreme. Forget about what the noise is doing inside. Look at this. This is a noise because a lot of people are trying to buy this market to the upside from here. And market will also give you few prints because this is just nothing but a what? Nothing but a flag pattern gathering liquidity. You see, immediately it took out all the money above here, it flashed down to come and use these people as the next victim and these people here. The whole story here is it has nothing to do with you. What you need to do is just focus on your two POIs. If you wake up and you see that, oh, this one has been invalidated, forget whatever. You don't need to come here. Just set your alert here and wait for market to come here, or set your limit order here and wait for market to come here. It's as simple as that. Leave the internal structure. It will confuse you. You have to leave the internal and you have to understand it. So, are you clear on USD JPY now? Okay, so we are already at 53 minutes. So let's see what's next. Which pair are we looking at next? So let's see what monthly is doing first. If it's clear enough, we can work with it. Okay, you can see monthly is bearish, systematically bearish. Just looking at it, bearish. Then immediately I see it, I know that this is the last high that the market created. And this is the last low, previous last low. Then you can see market swept this. Why? These are obvious break of structure, but it's not complete because market do not close below. So that's a sign for deeper pullback or temporary pullback. So, and why is this valid? Because we have our minor inducement here, but let's say this is our major inducement. And let's see, why do market return here? Because this is the only valid POI. This is the decisional POI here, this place. And see market mitigate it and drop. Even a monthly time frame. After inducement taken out, no POI, this is the next POI. Then by that time, we can now say, okay, maybe I don't want us to go back too far, but you can see this is like other block that the market reacted to and break this structure in terms of monthly. Broke that structure. So, and market continue pushing down. The market came back for inducement, mitigate this. So it means that if this level fail, market can also respond to this level. So, but you can see market mitigate this one and push down. But market refused to close below here, which is a sign for we can't mark this as break of structure yet. This is a sign for temporary pullback or major pullback. This move alone can reverse this whole structure. So, but according to our plan, we still need to look for our recent inducement. You can see this is our recent inducement. And where is our POI? No POI, no POI, no POI. This has been mitigated, and this is our last POI, which is order flow. So market can come here, and you can see market is still responding to probably this other block, but it has been used. It has been used. It has been mitigated. So, but we can't use this again. It's already mitigated. So, and another thing is fair value gap. You can see this is a fair value gap. So that make this other block to be valid. So, so this is what this is the higher time frame. So let's say this higher time frame is telling us we are pushing up. And remember, market can easily start pushing down because of what he has taken whatever he needs. What he needs is what I said. All he needs is liquidity. POI is not what makes it valid. Look at it. These are all liquidity. Do you get? The market has taken it. So market can drop from that level. So but we are not just going to say it. You said? Okay, yes, it's just a liquidity resting above them. But what you only need to confirm your break of structure is just this. The nearest liquidity is all you need. These are internal, these are minor liquidity. Because if you look at it, look at what this market is doing here. This pullback, you see this internal pullback, you can see this is a major pullback and drop. So this high now, for me, I understand that this is a minor pullback. If market do not sweep here, I know that this market must take out all this move, all this high. It must take it out. So, but for the sake of consistency and making it simple, once market take out this high, I know that. And look at it. If you come to the chart and you see that market has taken out your inducement, all you need to do is to start looking for buy to the upside, because you know that once the inducement has been taken, our market is going to POIs. So you can take a risk to buy to POIs. But let's leave that and see what daily is doing. So we understand that our monthly is telling us buy. But remember, because we are buying in monthly, does not mean markets cannot sell. Because in this move now, we can start saying, okay, let's start looking for. Remember, this can be monthly. This can be monthly inducements. Market can use this as monthly inducement or this one, and market might want a deeper pullback, maybe like this. Remember, this is just like a counter trade, like this. The market might want a deeper pullback before it continue. Might want a deeper pullback before it continue. Those are the internal noise. But in order to just see what the monthly, the weekly is doing, and monthly and daily is doing, we can look at it this way. Now, this is daily structure. Sweep, later market close above. Then this low will be protected because this is the last low. Why is it valid? You can see we took out this low. You can see we took out this low. This minor, this is the inducement that we took out. And market mitigates something here. That block. Because if you want to look at it from the back, you can see this is the last high, this is the low, the market needs to be protected. So this is the last order block. And you can see market responded to this last order block, take out this, responded to this, and boom, and sweep this high. First attempt, second attempt, and finally market close above. So it means that this is our low, and this is going to be our high. So, and as you can see, after we had this break of structure, we have to look for inducements, and this is our low. we can't trade until market take out this low. You get the concept. So, and where is our POI? This is our extreme POI. If you want to be aggressive, you can use this as your hidden POI. But since it's close to your extreme, there's no point. So you can see you come to this level in 1 hour or 4 hours and you start buying. So, but because this level want to fail, so even if you had maybe 2 trade here towards to this side, and maybe the last one failed, you've already secured like 6% and you lose 1%. So, and you see, finally we had change of character in daily. So temporarily, we can start looking for sell because market has changed character in daily. So now that we have daily change of character, this is the current situation in terms of daily. Now, what are we supposed to do? Look for your inducement. Where is your inducement? This level. Is that correct? This is incomplete push. So you can see market push up. Assuming that come below here, we can mark it as but continue pushing up. So this is your inducement. Where is your POIs? No value, no value. This is your POIs. You can see market is responding from here. So, and we can now mark our low. Remember, this is also high. So let's see if we have a stream. This is the other block. You can see it has been mitigated. So it's likely for market to start rejecting from here or sweep this high or break above. These are the scenario that can happen. You can see a move like this, sweep of this level, then you start seeing the momentum. Or market can do like this, close above. And once you close above, we have change of character again. Then we start looking for buy. Do you get now? So you have to be thinking in probability. You have to be thinking in both sides. So currently now, daily is telling us sell. So we can go to 1 hour and see what the daily is doing, what the 1 hour is doing. So in this case, we can look at say, okay, where is our last obvious 1 hour structure? We can mark this. Why is it valid? Because market took out liquidity, took out major liquidity, and probably responded to this fair value gap plus order flow. So you can see market responded here and push up. Do you get the concept? And now this is going to be our low. So do you understand? Now that I said markets can markets we can now if you want to be aggressive now, this is what we'll do. Now that higher time frame has been mitigated, remember market can easily push up again. But based on say we are following the plan, let's look if we have our last pullback. Where is our last pullback here that we can use as inducement? I can't find any last pullback. This is not valid. Where is this low? Low 797. 799. You can see this, no, 797. I think this is valid. Yes. Let's check. Yes, this is valid. This is lower than this candle. So this is a valid inducement. So for aggressive purpose, this can serve as our change of character for aggressive purpose. And let's say we are using this as an inducement. Where is our POI? This is our POI. So this is our decisional POI. And let's see if we have a stream. We do not have a stream. So this is a good sign. So we know that even if market wants to push up, it's likely going to come here. But at the same time, we can't tell the market what it's going to do because it can just push up from here, take out inducement. Remember, I said inducement is all you need and push up and create another break of structure. Then the process will return, maybe like this. Sorry, maybe like this. The market is doing its thing like this, and I'll break up. This higher time frame POI is still valid. So, and you can see market do like this, then now start selling. So it doesn't mean as long as higher time frame is still valid, you can repeat the process. But currently now, this is what we are looking at. If we want to be aggressive, then we will look for where is the liquidity. You can see I'm not seeing any liquidity here that the markets want to use, and this high can also be a liquidity. So assuming that we have inducements, like this, maybe market do this and come down, then we can say this is a liquidity, and we can be looking for extreme order block and sell. And if you are selling, we can first sell to this level. Sure, you understand. But as it is, I'm not saying higher time frame has been mitigated, but I'm not saying so. This is the POI, but this POI do not have inducements. So and remember, we don't take a trade without inducement, or else we become the inducement. So let's say market drop from here and come below here. This is not break of structure. You know that already. So we can now say, okay, then let's see. Maybe this one hasn't been mitigated. We can now say, okay, maybe market is reacting. We allow the market to do this, then we cannot drop. Do you get? We can sell from here because we are responding to what higher time frame is doing. So we can add a sell from here. By then, market has already taken out all the liquidity here. Then maybe we respond to this other flow or other block, whichever one, and we can set to this level, maybe here. This level first, break even here, because the market can get here and bounce off. So then the final level. So once we confirm that this change of character has happened too, then we can now position for proper sell, and we'll be waiting for market to do its things. Maybe like this. Maybe we had something like this. Change of character here. Market can use this 2P or this, and market come back here, then we can have sell. This one now confirm the same thing we are having in higher time frame. Do you get the concept? So, and another scenario is this. Market do this, push down, do all this, close above here or sweep here. Then once market close below here, we have change of character, then we can start selling. So by that time, this low will be our new low. You get, so it's still the same process. So all you need to do currently is to pay attention to what is happening here. Watch what is happening here, and let's see what the other time frame will do. So that's it on this. Are you getting the concept? Yes. Any question? Okay. I think it's about 1 hour now. Which other pair are we looking at? You said? Yeah, I'm with you. Yes, that's what I'm saying. That's what I'm showing. So let's see what GDP JPY is doing on monthly. If the monthly is not clear, we go to weekly. So systematically, we are buying on monthly time frame. We are buying based on this current trend, not in terms of structure, based on this. So let's say this is our high. Why? We know that there is liquidity, the market has been taken out. So it means that we can use this as our low, and then markets break structure, refuse to come back for this liquidity and create another liquidity. We created another one here. So this is the current one. So monthly liquidity here and push up. So it's still pushing up. So let's go to daily and see what daily is doing. So daily is also pushing up. You get, because if you look at it, you can see break of structure, liquidity grab, mitigation of this OP, but you only grab liquidity push up, and daily is also pushing up. So there's no need to. It's also doing its thing. So, but remember, look at this. Remember these monthly inducements. Now, market is pushing up, but if you go to daily and we start seeing change of character, we know that market is likely trying to target this low. Do you get? Because monthly is pushing up. So if we go to daily and we start seeing maybe change of character like this, it means that monthly want to pull back. So probably to this level. So you just have to understand, not that you will wait until market come here before you start buying. You can read because we know that in monthly time frame we have impulse, correction, then impulse, then inducement. So if market is here and you know that market is coming below here to come and take out inducement, and you see a sign in daily time frame that's telling you sell, you will need to sell towards this level. Do you get? So that's one of the essence or the advantage of top-down analysis. So it's just to give you the directional bias, what the higher time frame is doing, not that you have to just trade in the way the direction of higher time. If higher time frame is pulling back, you can trade towards that pullback in lower time frame. So let's see what daily is doing. Where is our daily high? Let's see what this one is doing. This is the high, not break of structure, but this is the high. So, and let's see this high. This seems to be the inducement for that high, and this seems to be the POI for that high. This is order flow. If you want to use order flow, complete. Sure, you understand. So this is the POI. So it means that you're expecting this market to push up in daily time frame to come and break this high. Do you get? So it means in daily time frame we are expecting the same way we are expecting USD JPY to also push up. GDP JPY too, we can expect it to push up. Do you get the concept? So so let's see what 4 hours is doing from this daily mitigation. Let's see what if you go to 1 hour, this candle will be plenty. So let's see what 4 hours is doing. So in this case now, you can see after market mitigates, let's say we use this as change of character like this, and market push up, take out this inducement and mitigate this level. This is our order block. You can see market mitigated it. So in 4 hours, if you position here, put your stop loss below here, you can take a risk and probably 1 to 3. But in this case, I would prefer 1 to 2.5 because I don't want to take entry that is too far from break of structure. I don't want TP that is too far. Normally, this is the ideal level. So if you want a good RR, you can turn to 15 minutes here and start looking for buy towards this high. This is just the ideal level. So and let's say I'm being greedy with my stop loss, I can still get good RR. You see, 1 to 3 clean. So where you put your stop loss determines your RR. So the bigger your stop loss, the longer your TP will get to. So, but this is the ideal level. Don't assume that market will come here. No, it will come here, but currently now this is not the ideal level. This is like you are projecting long time level. But currently, take your trade. Let market gives you whatever it want to give you. Don't be too greedy. Then you position again. So in 4 hours, what do we see after we had this entry? It means that we can protect this low. And let's see the inducements. This serves as our last pullback that the market did. And where is our decision now? We have another pullback here that the market did. You can see market flash it, no respect for it. So let's look for extreme, 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 extreme. And this is the only, I think I'm seeing something here. Your extreme is not necessarily that it will be here. It's just the first and the second POI that make it valid. Like the first and the last POI. If you have just two POIs, those two POIs are valid. But if you have three, you pick the first one and the last one. If you have four, you pick the first one and the last one. If you have one POI, that's the only POI you have to deal with. But if you have two, it means that those two are the valid one. So, and you can see, I think I'm seeing something here. Let me see if it's valid. If it's valid or mitigated. Yes, it looks like it has been mitigated. So let's look at the low of this 496. Let's look at the high of this 497. It has been mitigated. So this one has been mitigated, but probably maybe in another time frame, market reacted to this level. So in this case now, this has been mitigated, we can't use it. So the other thing we can do is come to this level and use this hidden POI. So we can take it from here just for a refined purpose. Or, and you can see. So let's say we use this hidden POI. Or another thing I do is I do 75% pullback. So you can see this is another thing I do. So why market push up but refuse to break above here? So that's why we can confirm this as break of structure. It refuse to break. You can see market do not break. It means that market just wants more liquidity. And if you're looking at liquidity in this scenario, these are liquidity. Maybe somewhere here. These are liquidity. These are liquidity here for this. Do you get? So, and this I is also a liquidity. The market is going to target later. So, and you see, so let's say I use 75% or this is my 75% pullback. Then I can start looking for buy here. 75% pullback. Put my stop loss here. This is a bit reliable. Sure, you understand. So I will have had a good trade here. Do you get the concept? 1 to 2.5, 1 to 3 is here. So this is also fair. So do you see the concept? It's still the same thing. So let's use 1 hour and see what 1 hour is doing here. Just like 1 hour can also give us maybe the same setup. So this is 1 hour. We have change of character and 1 hour inducement, 1 hour decisional POI. In this case now, maybe our 1 hour extreme will be here. So we definitely miss this trade. So market break up, then we have this low and this high to deal with. So 1 hour inducement, 1 hour decisional POI. Let's look at what this is doing. You can see that we do not have 1 hour other block here. Instead, we had this. This 1 hour other block. Are you with me? So this is the other block in 1 hour that is valid. So you can see market went there and That's where the market trigger. So you see that if you're using 4 hours, you have a good trade. If you're using 1 hour, you have a good trade. So this is what USD JPY is doing and GDP JPY. So so it does. Are you clear with this? So in this situation now, remember I said this is a liquidity. That's what the market will target. After it has target internal liquidity, then you come and target external liquidity. So so in this case, we are expecting market to break above here to the upside based on what daily is doing. So if market give us another pullback, it's still a good sign for us. Now we can mark this, look for our inducements like this, then look for our POI. Let's look for here. Let's look what this POI is doing. Look for our POI. Is there valid pullback here? No valid pullback, no valid pull. This is the only POI we are having. This other block. So we can use this. So if market choose to come back here, other flow. Yes, valid pullback, valid order flow. And look at this. This, if I to mark order flow, this is the last sell candle before this last sell movement before this happened. Then it has been mitigated by this pullback. So you can see this another. This one now has not been mitigated because there's no valid pullback that come to mitigate it. So you see, but for us to refine the other block inside, that's why we are using here. So and you can see this one is also a valid order flow, but we can't use this because that's where the inducement is resting on. Do you get? So we cannot use this. It's only if market do this and now do this, then we can now use this. Maybe the other block inside here, one, or we allow this to happen. Maybe this one fail like this, then we can now come here and buy towards this direction. You get, so if you put your 75%, you can see it's likely going to rise here. From this low to this high, then you drag it, then you can see this way is going slightly going to high. So that's one why I teach. I use 75% is if I don't just want to just to make it simple for people and for myself sometimes. So if market is doing this, and I know that okay, maybe this will serve as inducement, this will serve as I just want market to do major enough pullback for me to continue. So instead of me stressing myself, I can use this 75% pullback and wait for market to come here. It's enough to push the market up. So if I put my stop loss here, I can target this extension. This. Come again? No, it's not a must. It's not a must. You are not. It's not a must. It's just added confluence for me. Sure, you get. It's not a must. You can pick your other block there. If your other block. No, come again. I'm trying to get you. Yes, it's for added confirmation. You know, some people say discount and premium. I don't really fuck with that, but they say discount and premium. It's still the same thing we are doing. So in this case, let's say this is their high. Yes, 50%. Then from here now, some people will say, okay, if the market is here, I'm not looking for buy. I want market to come below 50%. Then I can buy. I can start looking for buy. So what they do sometimes is they, depending on how they pick their structure, they let's say this is a higher time frame, daily time frame, for example, and push up. They want this low to be protected. This is the high that the market created. So they will now carry Fibonacci and say, okay, you know, we understand where the POIs are. They might not. So I'm just trying to cite the example of so if the market is here, they will be like they are not looking for sell. They want market to come below 50%. 50% discount, 75% discount. So if the market is here, they will now go to lower time frame and see whether they will have change of character. Then they will start buying. But for me, I know that anything that make market to come to 75% pullback, and we know that this low want to be protected, then market is likely going to reverse from here. It's likely going to reverse from here. So if I want to do that, and if I come here and I say, okay, do I have POI here? And I see that I have POI here. That's good for me. And if my POI is not here, maybe my POI is here. Then I'll start looking at, okay, do I have fair value gap here? Yes, I have fair value gap. Okay, maybe market mitigates my fair value gap and go. But I'm not going to enter directly. It's either I use lower time frame confirmation or I use candle confirmation or I just use my instinct based on. But anything below 75, I know that I should be preparing to buy. So that's it. But if I still want to enter directly at 75, irrespective of where my POI is, I know that my stop loss must be below here and I will target here. So my stop loss is below here. So even if markets traded into my POIs like this, I'm still okay. All I know is this level will be protected. Then market will push up. So that's it. It's just an added confirmation to keep it simple, not anything special. So this is it for GDP JPY. I think we've had enough this thing, enough analysis. So that's just the concept. This is just the concept. I have a trade. I have a trade that I'm looking at. Is it GDP? Is it this? I have this trade that I'm also taking. Yeah. So I was using this line to explain something to a friend. So you can see this market is selling. Now in 4 hours we have buy. You can see this is my inducement. This is the only decisional POI that I have, and this is my extreme POI. You can see that I've laid trap for both POIs, and this one triggered, and we are expecting market to go up. Why I put this line is just a liquidity line, liquidity trend line. So you understand? Because this trend line, this liquidity is likely going to attract the market to go to go and give me break of structure like this. Okay, so the orange lines are your... No, this orange line, I just use it to explain something for someone. So it's not that it's not part of we don't need it. So I just decided to I forgot to delete them. So look at this. Market can mitigate my POI, and if market don't want to, market can do like this, push up, then come down. Then we can now start having direction. So the way I manage my trade, I've explained to you. If I get 1 to 2, maybe like this, I'll push this to break even. Then I'll allow the rest to happen. Because this is a 50-50 POI, this is a decisional. But if I'm in this trade, and market is trading 1 to 2 for me, I don't need to touch it. But when it's trading 1 to 2.5 above, then I can now break even. Or I will leave it because this is high probability trade for me. So there's no point in break even there. I can just forget about it and allow the market to do its things. Do you get? So that's just the difference. Yeah. So this is the trade, and I have some loss over the week, but it's just part of it. So this is just the trade. I think we're good. So I think we're good. I can't hear you. You're saying something. Yeah. Yeah. You just need to follow the process. Once you follow the process, then it's very simple. Master it, and everything will be fine. So no, this is not. You can see, I was just trying to analyze something. Not I'm not trading this one. I'm just analyzing it for someone. So you can see, I just put this in here. I don't trade this. So if I'm trading this now by this, maybe I will have break even, but it's not even up to 1 to 2. So, but I know this is a decisional POI. So, and you can see it look like market is responding from extreme. So, this is a decisional POI. I think I'm only using uh 4-hour structure to explain something for someone. So you can see we had change of character here. Market sweep this high. Market change break structure, create inducement, and market decisional POI extreme. So if this structure want to keep selling now, market must protect this high. Do you get? So yes. Yes, yes. Inducement must be on that time frame. See, is this if market is doing this for you? Sorry. So if market is doing this for you, all this where you will mark everything you want to mark. This leg, this movement is where you will mark it. This is where you are going to mark your inducement. This is where you are going to mark your POI. The same time frame, this is where you are going to mark your maybe your extremes here. So if market now come here, let's say this is your daily. If this is your 4 hours, you go to 15 minutes. But if this is your daily, you go to 1 minute to 1 hour. So if market now come here in daily, you now do what? You now go to 1 hour and go and look at how daily, maybe 1 hour structure is like this. You now mitigate here, market now change character, then you can now start buying to the upside. Do you get? But if market fail daily, let's say 1 hour fail your daily now, like this. Now you will need to start thinking in another 1 hour direction. You will go and say, okay, maybe daily fail like this, or let's say you do this, push up. Okay, let me say maybe you do this, push down. You can then in 1 hour you can start looking for setup towards this direction. Do you get? You can start looking for setup towards this direction. So and it depends on the time frame you are using. If you are using 4 hours for your higher time frame, what I'm saying might be different from what you are saying might be different from me that is using daily for my higher time frame. That's why you have to be consistent with your own higher time frame and with your own lower time frame. Your friend can be using 4 hours for higher time frame, and you are using daily for higher time frame. Your trade is likely going to be different. Your setup is likely going to be different. So that's why you need to be consistent. If you're using your higher time frame, stay with it. Daily, if it's 4 hours you want to study, go to 4 hours and look at this. This is 4 hours POI, for example. If I switch to 15 minutes, let's say I switch to 15 minutes. If I switch to 15 minutes, what I want to see is to know whether I want to enter aggressively or I want to enter conservatively. So, and you can see what 15 minutes is doing higher, higher, low. This is the last high that the 15 minutes created. So, this is change of character for 15 minutes if you want to be aggressive. And this 15 minutes, it's like market take out this high, use this high. Okay, it's not a valid pullback. So, market just use this other and this value gap and push down. You get? So now you know that we have change of character here. Then market, you just need to, because market do not give you entry here because there's no inducement. You just have to wait for market to do something like this to give you complete structure like this. Once you identify complete structure, inducement taken out, then you can now start looking for sell in that direction. Do you get? So, and if you look at it, market sweep this high, use it as inducement, and market close below. Break of structure. Now you have a complete structure. What are you supposed to look out for? Wait for market to do inducement pullback. Okay, you understand. A market create another one, put it here. This inducement, you can see. So market create another one. A market push down, a market stay. You know, we are not taking inducement, we are taking trade at what? At other block, not at inducement. You see that other flow or other block. So this is our other flow, and this high must be protected. You can see. So if you're dealing with other block, this is what you'll be dealing with. So maybe market will come there or not. I don't know. So you can see this other block. So, but if you want to trade direct, you can trade with other flow because this peep stop loss might not be too big. So maybe you put your stop loss above here and you do what? You target 1 to 3 or whatever you want to target. So you can see, even despite the fact that 4 hours decisional POI fail last, but you see how market will first give you money before the 4 hours POI will fail. So you can take your 1 to 3 or 1 to 4. So you see, so if you go to 4 hours, you will see that despite 4 hours POI fail, you were still able to make money. Do you get the check? So that's the advantage of using lower time frame. Even if you are using higher time frame for like daily time frame as higher time frame, if you go to 1 hour, if you follow the same process, you are likely to make money with the decisional POI before it fails sometimes. Do you get? So you can see it's very simple. This is just how you can engage in this trade. So, and let's see what happens. After this flash down, let's see what happens here. You can see you have pullback here. Market sweep the pullback and break below. So it means that this high is likely supposed to, this must be protected, this highest level that the market created. So, and after we break below, it means that we now have a structure. Is that correct? Yes. Now we have a structure that says like this: push down, push back, push down, push up, then drop. So you can see that we had a structure like this. This is what I'm telling you that you should wait for. This is structure. You see, inducement taking a market push down. So that's a structure. So this is the high. So where's your inducement? This level. And this is your hidden POIs. You can use this week, but it will be too refined. So you can use the whole body. So you see, even if you take another trade here, put your stop loss here. Following the same process, you are likely going to make money too. If you target your low, you see. But this is very simple. This trade can end up in break even if you are not careful, because market is almost at your TP. Let's say you are targeting 1 to 4, for example, like this. Market has given you almost 1 to 3, and if you panic, or this is more of where psychology plays. Okay, market is going my way. You now see the market stock here. You will break even, and if your break even is still like, maybe you now say, let me move to positive zone. You can't move it here. You will see market will take your money and still come and eat your TP. So, but if you stay with whatever you decide, say TP or SL, then you can see market will deliver another good trade for you. So you had 2 wins, despite the fact that higher time frames still want to fail. You can see first attempt sweep, second attempt close below. So we have a structure here. So, and we are expecting market to protect this high. So now, where is our inducement? Our inducement is here in 15 minutes. Then where is our POIs? This is the only POI that we have. And you see, maybe you will be preparing to set here, put your stop loss here. Now, you get stopped out here. You are looking for 1 to 3 or 1 to 4. Let's say 1 to 3. You got stopped out here. But from the experience, remember I said this stopped out, this high must be protected, but it can be swept. Protected means that candle will not close above it. If candle close above it, that's when you have change of character. But if candle do not close above, if I'm seeing something like this now, all I need to do is to just wait for correct bearish momentum, because I know that this is a sell and I can take a trade from here. You see, market is just sweeping, sweeping, sweeping. Market was unable to close above here, and we now see a displacement that give you this set. You can just take your trade. You can just take your trade at this order flow. Are you with me? So you can take a trade like that, and you see how nicely market come below here. See the same thing. So if you add a loss here, you add a win here, you add a win here, you see that 3 minus 1 plus 3. Let's even say all is 3, not 4. You see? So in this trade alone, before higher time frame POI fail, you have 3. That's 9R minus 1. That's 8R. You will be profitable 8% here. And finally, market change character. Maybe you now lose another trade here, because I know you want to sell here. So you add a loss in this place now, finally. So you end up in 7% profitable. 3 win, 2 losses, 7% profitability. So it's still the same thing. You know that we have change of character here. If you're even only using 15 minutes time frame, it's still the same thing. Wait for market to create structure for you by sweeping inducement, by closing above. But you refuse to close above, you know that this low is a weak low. Market might want to sweep it, and there is no major. Okay, this is the inducement, but because market refused to sweep above, then you should know that this low cannot sustain the market. So market might target this low again, and if you're looking at it, you can see that this is the value pullback, this is other block with fair value gap, and this is the first other block. So you see, you miss the trade. Let's say you don't even want to trade here, and market break above to confirm your break of structure here. This break above, then you look for inducement. You can see you have a very small inducement here. Everything I'm teaching you happen in all time frame. You see that we are not even going to higher time frame to do anything. And you see, market mitigates your POIs. This is the only POI. Because of what? You know that this low must be protected. And this is the only value POI. Why? Because it has fair value gap. So if you position for here, you can still have a good trade. So target maybe 1 to 3 or whatever. So this is a good trade. And another structure form, another inducement form. Where is our POIs? This is the only POI, but this is also an hidden POIs. See, market go to that level, and then market break above. So if you miss a trade here, look at this. This is the high, this is the low. This pullback is now up to 50%. That's why people take trade from the 50% below POI. You can see market comes here and start trading to the upside. So this like 15 minutes internal POI, wherever, and you see market change character again. Maybe you have one win here and you had a loss here, because for every change of character you are likely to have a loss. And you see market still repeat the same thing. Then decisional POI, no decisional POI, we will be waiting for here for market to react, and market do not. Market just reacts on this fair value gap and drop. So you see we have a complete structure. And again, after complete structure, no pullback, no pullback. This is supposed to be our inducement. The market refused to take inducements and create another inducement at this high level. And then this we serve as our POI. You see? So even if you take a trade, decisional POI, put your entry here, you are likely to still have a win trade before the market fails. If you target here, you can end up in break even. But if you take 1 to 3, you can still have a win trade. And by then, maybe this will be your extreme. And you also want to take a trade from here. You can see, put your stop loss here. If you are lucky, maybe you had a break even here, almost 2.8. So if you are lucky, you have a break even, and if you don't, you had a loss. So you see, whichever way the market is going, even if you are following it with all the same concept, you will see that you are still going to be profitable. It's not about whether it's right or it's wrong. It's just about consistency. When you are consistent, you will see that it's just going to be easy for you. See other blocks that the market is responding to, and you see break up. So this one is a decisional order block. Let's see if you have extreme. This is like extreme order block. So you see, so if you're taking a trade from here, you are likely, if you are too greedy with your stop loss, but if you give it a little bit room, you can still have maybe 1 to 3 before this setup fail. And if you don't have 1 to 3, maybe you end up in break even. So it's still the same process over and over again. So for me now, you can see 75% pullback. Come here, yes, this is where I'll be positioning for. A market refused to come there, and I leave it. So it's still the same process over and over again. Do you get the idea now? So that's it for this section. I think you can just take a look, check what the market is doing, follow the same process that I've explained to you. And if you have any question, you know how to get across to me. On what? Okay. You can just be marking your indices the way you are marking things and forget about it to just see how well you are doing. So you can focus on currency. You can, and if it's even on the other one you are doing, it's still the same thing. Just be consistent with it. That's all. Do you get? Just be consistent with it. Yeah. All right now. Yeah. If you have any other question, you can take your time to just get it across to me. All right. Yeah. Bye.